Hey everyone, Coach Investor back to our video for today. I hope you all had a wonderful time during Christmas with your friends and family, and I hope we're all gonna have a wonderful 2024. Now, this video I want to talk about Nio going into 2024 because in recent weeks there was quite a lot of news that should positively affect this company and should positively affect the stock as well. Of course, the stock already had some positive momentum with it because of the recent announcements, but I want to add my opinion on what has been happening with Nio and why you should still look at this company very, very closely when it comes to the cash burning aspect, despite the huge injection of cash that was announced not so long ago. Now, I first want to start with a little recap of what was mentioned during the earnings call, which was already the first positive step. So they said, we've identified that in the coming 3 years, bringing battery production in-house will not help us with the gross margin improvement. In this case, we have decided to defer the plan. We will still continue to do the in-house R&D of battery cells, battery materials, and battery packs, but we will outsource the manufacturing of the battery packs for better overall efficiency and performance. We also had the news that Nio will cut 10% of its workforce as the CEO predicts intense competition from BYD, from Tesla, and from all the other car makers in China. Now, of course, this was well received by investors, by the market, because Nio is still a company that is burning quite a lot of cash each and every year. Now, with cost cuts, cost control, we should see some margin improvements. We have seen some margin improvements already in the latest quarter, but that's only on the quarter-over-quarter basis, not yet on a year-over-year basis. More on that later on. Now, more recently, there was Nio Day, which, by the way, was a pretty impressive event. And here I want to focus on the two major aspects. One, the new smart electric executive flagship ET9 that was unveiled. Pre-orders are available right now, but you will only get that vehicle probably in the first quarter of 2025. Now, from what I understood, what they've been saying, I mean, the message is pretty clear. I don't think this is going to be an extremely cheap car, not at all. I think the market here is for more elitish people, so expect a premium price tag on that vehicle, which could mean that this vehicle will have higher margins for them, depending on how the manufacturing of it is done. The second big announcement was this: Nio unveils in-house developed autonomous driving chip. This will be built on a 5nm process and has over 50 billion transistors. Now, very impressive that they can do this in-house. They even said here that the computing power is comparable to 4 NVIDIA Drive Orin chips. Now, these chips will be used in the ET9, the vehicle we just saw before, which is already available for pre-order, but delivery won't begin until the first quarter of 2025. Now, they do compare this again with the current NVIDIA Drive Orin chips again and again, which, okay, fine, it's pretty impressive what they can do already in-house comparing itself with NVIDIA. But NVIDIA last year has already announced a better version, which is called Nio Drive Thor, which should become available in 2024. And as you can see, it is a huge improvement on what they are having right now, which is the Drive Orin chips. Again, this will be available in 2024, targeting automaker 2025 models. So, Nio comparing itself to an NVIDIA product that is already available right now, whereas their product will only be available in 2025. And in 2025, NVIDIA will have a much better product already available. Again, very impressive from Nio's standpoint that they can produce a product that NVIDIA can produce as well. Doing that in-house is pretty impressive. But marketing it as if it's better than what NVIDIA has right now without acknowledging what NVIDIA is already working on for the next coming years is a bit misleading. Then moving on to the biggest announcement more recently was the $2.2 billion strategic equity investment from an investment vehicle based in Abu Dhabi. This will also dilute shareholders by around 15%, by the way, but it will give Nio an extended lifeline, let's call it. They are now having, I believe, the cash and cash equivalents from the last quarter was around $3 billion. So getting another $2.2 billion should help them with cash flows in the coming quarters, which we can see right here on the assets, cash and cash equivalents, $3.3 billion for the latest quarter. And with net loss increasing 10.8% year over year, an injection of cash was very, very well received. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. The goal for 2024 is to reach 40,000 subscribers or even more. So if you want to help me out with that, hit that subscribe button. It's free. You can always unsubscribe later on. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, continuing here and a bit on a more positive note, quarter over quarter, things have improved. When it comes to vehicle sales, big improvement quarter over quarter, margins as well, but year over year, we are still down here when it comes to margin. As for the overall revenue, that has also seen some improvement quarter over quarter and year over year. Same with gross profit, quarter over quarter improved, year over year still down 12.2%. Gross margin, same story there. Now, with regards to the upcoming quarter, the outlook was basically deliveries of 47 to 49,000 vehicles. It is representing an increase of approximately 17.3 to 22.3% increase from the same quarter in 2022. But if we scroll back up and we look at the numbers for the latest quarter, we can see that it will be down quarter over quarter. Now, currently, if in December it can deliver the same amount, 15,000 or 16,000 vehicles, it will reach the midpoint of their outlook. Because in October they delivered 16,000 vehicles. Let's say that in November it's also close to 16,000. So you're already at 32,000 vehicles. Let's add another 15,000, you're at 47,000. And if it's another 16, you're at 48,000. So they will be meeting their own expectations, but not exceeding that. That can change, of course, in December. So going into 2024 for Nio, what investors will probably be looking at is margin improvements and increase in deliveries, because we've seen some improvements in the latest quarter, but you don't want this to be a one-time thing. We've already fallen into that trap not so long ago where things were going into the right direction and then suddenly, bam, everything went downhill. So you want to see that continued improvement each and every quarter. Now that it got a $2.2 billion injection cash, this will definitely help the company. And now that they are focusing on profitability, focusing on margin expansion, 2024 should be looking much, much better than 2023. Of course, there is still going to be increased competition across the board. But in my opinion, as interest rates come down, as the market in China recovers a little bit, the government will probably inject some cash, let's say, in the market that should push demand for vehicle sales as well and should help a company like Nio. But it is very important to note that if in any of the upcoming quarters, suddenly we get a sense that the management is again going into the wrong direction, focusing on looking good instead of being profitable, instead of being a good, well-run company, then yeah, maybe you should raise that red flag yet again. But now because they have that $2.2 billion, they obviously have a longer run rate to burn that cash and maybe become profitable over time as well. The Abu Dhabi investment vehicle will also be able to nominate 2 board directors, so that can also have a positive effect on how the company is being run. Now currently the market is actually expecting this stock to go up 31 to 32% in the next 12 months. This is basically the average price target sits at 11%. Right now with the stock being at 8.8, 8.4%, market cap of $15 billion, quite a nice upside in the next 12 months. Of course, price targets can change. As you can see, the average here, back in January 2022 was close to $60. Now it's closer to $11. So yeah, it follows sentiment. If we look at the graph, we can see a bottoming here around $7. In recent weeks, we have gone up over the 50 and the 20-day moving average. The 200-day moving average currently sits at $9.7 or so. Let's see if towards the end of this year, in the coming days, we can make that push and try and test that 200-day moving average. It's going to be pretty important. This is, by the way, on the weekly. So overall, Nio as a company going into 2024, it's going into the new year as, let's say, a better company, in my opinion, than what it was 1 year ago. It is delivering a bit more vehicles. Margins are now improving quarter over quarter. Of course, remains to be seen what happens in the upcoming quarter. It now got a huge cash injection as well. Of course, there's dilution attached to that. But going into 2024, you do get a sense that the company is going to do better as a company. The stock will do what the stock will do, but overall in the long term, the stock should follow a business performance. But in 2024, what investors should be looking at is definitely improvement when it comes to profitability, improvements when it comes to vehicle deliveries. Definitely be on the lookout for any of the other new weird announcements. Lifestyle, phone, stuff like that should not really be that important for you as a Nio investor. If they can do all the right things in 2024, then definitely you can see this stock outperform. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.